Welcome to the March 2018 Wealth Management Update. My name is Katherine Liola, President and Founder of CONCENTRIC Private Wealth. We start March off with a celebration of International Women's Day, bringing recognition to the incredible achievements of so many women, while also bringing attention to areas that we need to affect positive change. In the financial services industry, only 16% of the financial advisor pool are women. This is not okay, but it is an area that we can change. With conversations with women as well as young girls in our families and in our communities, we can empower women to learn more about money and to also consider the financial services industry as a professional career. Backgrounds in mathematics as well as communications, education, psychology, marketing are all wonderful backgrounds to support a very successful career. Our attention in March is also on risk. We are celebrating 9 years of market growth since the 2008 financial crisis. 9 years, that is incredible. It is a wonderful time to be able to take a few steps back and to reassess what is the level of risk that you are comfortable with. What do each of your goals need? Risk is not just about how much money you might make or lose in the market. Risk is something that we learn about at a very young age and take with us through our adult years. So we ask you, how did you learn about risk? What were some of those activities that you're in as a child and as an adult that helped teach you about risk? Have you failed? What did those failures teach you about risk? Or perhaps there were life events that impacted or influenced how you look at risk. If you're looking for more questions to help you with your own conversations, please let us know. We want to be able to support you with that because ultimately we want to make sure that each of you are looking at what your own relationship is with risk and then also addressing each of your goals to determine, do we need to make strategic changes? Or is everything set up exactly the way it should be? Moving on to the market and economic update, we first and foremost have our attention on the market volatility in the month of February. The market volatility was sudden and it was deep. We moved into market correction territory with a 10% market drawdown. By the end of the month, however, we did see the markets bounce back, making up half of the losses that it experienced in the month. We do see that the fundamentals remain strong in our economy, but still that level of market volatility was not something that for many they were comfortable with. Historically, it's important to note that traditionally we see at least 1 month of every year having a level of market volatility as we saw in February. So this is normal. It's part of a normal, healthy economy. And that normal, healthy economy is one that the Federal Reserve Board has also recognized, which is also why it's likely that we are going to be seeing rising interest rates. Rising interest rates are not necessarily a bad thing. It's a sign of growth, but it is one that can create some market volatility. Other things that can be creating some market volatility is the conversations and headlines around trade. So this is one that we do want to make sure that all of our clients are prepared for between rising rates, with trade, as well as just at the very end of our market cycle, we need to make sure that each person is prepared for the level of market volatility that they could be experiencing and that the risk is aligned with what's important to them, with what their goals are, and what their own threshold is for the ups and downs in the market. We are here to help you with that process, whether it be with questions or revisiting each of your portfolios and accounts individually. We are CONCENTRIC Private Wealth, centered on what matters most. Thank you so much for joining us today.